So we have a panel coming up here. Are we ready to go with the panel? Yeah. The title of the panel is Geopolitics and Mining, More Uncertainty or a Clear Path for Opportunities. The moderator for this panel is Terence Ortslan, and he's of TSO Associates. So I welcome the panel to the stage. Here, no?
Thanks, Michael. From IBK, where are you? Welcome to the Geopolitics session with 4 insightful members of this panel. We want you to leave this room in 30 minutes with opinions and conclusions and some suggestions. So, from left to right, John Price, based in Florida, working South America, Central America. Gary Stanley, based in Virginia, essentially managing director of critical metals. Next is Matthew Zolonowski from Washington area. And Jose, who actually lives in Toronto, for O3. The geopolitics has been kind of misunderstood a lot of times. Everybody thinks it's a negative connotation. Well, it isn't. There are opportunities with geopolitics. There are opportunities with the pricing, the supply, with the capital markets and all. And the only thing changed over the last 50, 60 years in geopolitics is that we had China to become half the world consumer and producer of metals pretty well. So they dominate the demand and the supply pattern to the extent whereby others have to adjust to it. I'm going to leave it at that, and I will ask each speaker to introduce themselves and what they think about the geopolitics, the way we see it today, about the supply of the metals for the future, for the demand of the metals in the forward-looking path, the pricing of the metals, will there be volatile? Would they be steady? Would they be responsive to the supply demand? Or would that be more like the geopolitics issues which we can't control? And finally, the capital investment that we expect to happen in this industry, which is not taking place, and we have to spend the capital on the projects, and we know that, and we have the projects to spend money on, and what their opinions on this are. So with this, I'll start with the far away Jose from O3, but talk about South America, Peru specifically, and his experience and his views. Introduce yourself first. Thank you.
Well, so I'm Jose Vizquerra. Thank you very much for introduction. I'm President and CEO for O3 Mining. I am Peruvian by birth, so I guess I know a little bit of what has been happening in Latin America, specifically in Peru. From a geopolitical standpoint of view, of course, the first thing that you alluded to is supply and demand, and certainly supply and demand specifically for those metals that are right now being very precious, such as silver and copper, especially for what we have been seeing in the new electrical/energetical revolution. We have seen copper and silver more and more used towards those ends. And certainly we will see supply and demand, and I am a firm believer that those two commodities, at the very least those two, will continue to rise just on the back of supply and demand. On another note, talking about capital, which ended up being a very important piece of the story, capital will continue to be deployed to those areas that are safer, where the rule of law will continue to exist. And in that regard, I had the privilege to see, specifically in Peru, that while we had an extreme left government in Peru, with a very weak democracy and very weak institutions, we managed to have at least a constitution that had three main pillars. The first one, the central bank was independent. The second one was the respect of the private property. And the third one, by constitution, the government cannot do business. That avoided that this extreme left group took over the mining industry. And a couple months after, or a couple years after, this individual ended up being sent to jail. And in Peru, we can say that since 1968, we have not had any nationalization, which has allowed us to keep growing at a 5–6%. However, to attract capital, we will not be in the same position as the United States or Canada. So that has something to be said. Supply and demand will continue to grow and will depend on investors if they want to take more risk and go to places where things are easier to be extracted or where the balance is.
What are the major projects in Peru expecting capital attraction?
Pardon?
Major projects lined up in Peru requiring capital, which are essentially ready to go. Lack of capital holding their timing off the scale.
Well, the last project that was built in Peru was Quellaveco. I think it was around $6 billion. That was Anglo-American. Previous one to that was Cerro Verde, where my family out of Buenaventura was invested. It was $4.2 billion. It is today the largest concentrator that exists in Latin America, and it's very profitable. A project that has been delayed for years. Finally, it seems that the line or the light is at the end of the tunnel, which is Tia Maria, which will be between $2.5 and $3 billion, and that's under Grupo Mexico. You know, if we see where copper is, we have Chile as the first producer, Peru as the second producer. I think El Congo now, or the DRC is up there, like I don't know if second or first or third, but those are the three that are constantly fighting for that first, second, and third place, no? Which, you know, would be great if we can have more copper in Australia, Peru, and Mexico, where we will, you know, have constant supply. But that provides opportunity as well. But if Chile has issues with the extreme left and, you know, that is reduced, which they were not successful, by the way, their constitution was stable enough to avoid them to come into power, which was very, very interesting to see. But if they do reduce their production, we will see an increase in price immediately.
Matthew, you're combing the world, looking for opportunities. How would you rate the markets with respect to, with your opinion about the supply side or the capital markets?
Sure. So, short background about myself. I've spent, you know, probably the past, you know, decade plus in the Washington, D.C. critical minerals plus defense supply chain world, both in a consulting government affairs role, working at the Department of Defense's stockpile program, buying and selling commodities for them, and then finally working at their Defense Production Act group, actually vetting and selecting projects for investment. Taking a step back from that, I mean, really what I'd offer is that this is, you know, very much an environment that, you know, from my perspective, is very much kind of back to the future. If you think about most markets, you know, it doesn't matter if you're in Europe, Asia, you know, North America, it's very, very normal for countries to have a very direct role in managing their defense industrial base, both in terms of the amount of companies that participate in projects, how contracts are allotted at the subcontract level, and then in many cases having very tight controls on from where and from whom you can buy critical inputs to manufacture those products. And it doesn't matter if it's something that goes into ammunition or particular types of steel that are used in constructing ships. And again, if you can go all the way back to Adam Smith, and he'll have a few lines about, you know, restricting sources of British sailcloth. And so in that sense, you know, the kind of 1992 to, we'll say, 2022 hiatus of globalization is very much kind of an aberration from the norm of how, you know, supply chains tend to function, where if we think about it, there used to be some very, very significant controls on the distribution of, you know, with whom you could do business in the Warsaw Pact and then certainly in the West. And then at the same time, there was a very, very strong non-aligned movement that indicated, no, we still want to do business with both sides. And so in that sense, when I take a look at how supply chains are functioning, or alternatively not functioning today, really it's this jarring effect of how do we move from this system that was relatively open and transparent to something that's a little bit more closed and a little bit more bifurcated.
Thanks, Matthew. John, world exploration spending between Canada, U.S., and Australia, South America is the second biggest chunk of exploration spending. And there have been discoveries, a lot of projects. Argentina, in Ecuador, Panama, we had a little setback on that. And Chile, Codelco needs a lot of money. And Peru needs capital and recognition as well to get the system going. How would you look at the Central America after all these discoveries, with the policies that they consider, which are volatile, incidentally, that they will be able to path forward to bring the capital in and the technology and the international corporations to get their projects underway?
Sure. Well, thank you for those of you who stuck around in the room for this session. A little bit of background of mine. I've lived in and worked in Latin America for the last 32 years. Like Jose, born in Peru, strangely enough. And so my point of view is really through the eyes of the projects that we've worked on in Latin America. And of all the different things that Terence defined under the umbrella of geopolitics, I'm going to try to tackle the notion of project risk. I think a lot of mining companies spend a lot of effort trying to predict their future revenue streams and pay a lot of money to do that. And in the reality, a much more mitigatable area of finance of their projects is the risks and the costs associated with that, whether it's project delays or cancellations or expropriations or nationalizations. Those things are all mitigatable risks. And what I've seen that's really, I think, telling, and again, my perspective is Latin America, but I think you'll find it's applicable in many other parts of the world. 30 years ago when I got started, almost every mining company that went into Latin America, they focused all their efforts, all their charm offense on the ministries of mining and or the president's office of a given country, because in that very tight circle was all the decision-making power around how a project is permitted and how it is taxed. And that remained the case for a long time, but about 15 years ago, maybe a little bit less, with actually the advent of the cell phone, believe it or not, today 80% of adults in Latin America have cell phones. Even people with living on incredibly humble means in the Sierra areas of very remote parts of countries, they'll have a cell phone. And that has also coincided with a weakening generally of national governments. And in the past, if you partnered with a national government and you got any trouble at the mine, the national government was in their interest and in your interest that the military or some sort of physical force would move in and clear away the problem and use sometimes pretty unsavory means. That is no longer and has not been a viable option for mines for about 12, 15 years in Latin America. Again, because anything that goes on in those remote areas is no longer kept from the world. It's on full display thanks to cell phones, thanks to websites, thanks to the help of NGOs, etc. And with the weakening of national governments, it's local communities that became the most important stakeholders that miners had to work with and convince of the viability of a project. And at one point about 5 years ago, there was as much as 300 major mining projects around Latin America that were on hold or canceled due to local community opposition. What has happened more recently is, and I just wrote a piece about this last week, is you have two issues now, and it's not even about local communities, it's about the general voting public. Mining companies have to accept the fact that most people in the countries where they extract have never seen a mine up close, have no idea about the economics of mining, and the only way they're informed about mining is generally from anti-mining sources of information or a generally ignorant business media who, focuses on things that are a very incomplete picture of mining. And so what you have is a differentiation. There are countries where the structure of a government, like the Dominican Republic, puts a lot of power in the president's office, or the dictatorial nature of a government, like a Nicaragua or a Venezuela, puts a lot of authority in the president's office, or they also have a high level of popularity. In those cases, you still need to partner with those executive branches. Now, you may face reputational risk if they're an unsavory government. But for most jurisdictions today in Latin America, the executive branch is not powerful, does not control the legislation, and probably has pretty weak support of voters. And so then it comes down to whether it is a mining nation or not. Peru, Chile, Suriname, Guyana, and Argentina, because it is a federalized system and therefore it's at the state or province level, those 5 jurisdictions are mining nations that, in spite of left-wing politics or in despite of other interruptions, there's enough awareness amongst people and the political class that the economic benefits of mining are greater than the social and environmental costs as long as the other 2 are well mitigated. In every other country in Latin America, that is not the case. And this is what happened in Panama. This is what happens in Colombia all the time. This is what happened at one point in the DR. And Brazil. It's happened in lots of countries where if you put together an anti-mining campaign amongst the general public, the political class, it not being a mining nation, will fold its support for your project very quickly. I see this all the time in Colombia. In the Department of Antioquia, big mining department, they support mining. But in Bogota, they do not understand mining. And if there is a popular determination to close a mine or to stop a mine, all political support, whether it's left-wing or right-wing, will die because they don't understand mining. When Barrick was in the DR and had to negotiate with the Danilo administration about 12 years ago, what happened? It's not a mining nation, but it was a highly concentrated political power in Santo Domingo. So what ended up happening? That government spent money with the media to convince the voters of the Dominican Republic that Barrick should renegotiate with the DR, and they did. It cost them $1 billion to renegotiate. So are you a mining nation or are you not a mining nation? Is power concentrated in the executive, or do you have a weak executive government? Those are the things that you have to understand before you determine your strategy, whether mine is viable or how you're going to make it viable. Because the mining industry is well behind the energy industry at shaping voter opinion. The energy industry, I mean conventional energy, is just as dirty and negative an image globally, but you don't see energy projects canceled. They are accepted because they are a necessary evil. Mining is not there yet. They have not invested in PR the way that energy has, and that's the next frontier for making your projects, big projects, function in these countries.
Let's look at the tourists that go to Dominican Republic as an example from Canada or USA. There are 60 or 70 flights a week going to DR. And as a test, I asked them, I used to work in DR, by the way, that have you seen any mines, or do you know it's a mining nation? They go like, you got to be kidding me. You go to Puerto, whatever, to Santo Domingo and so on and so forth. The thing is that central of Dominican Republic, I think they got the biggest gold mine operation right now in the Americas.
Yeah.
Falconbridge nickel used to be there from early 70s onwards. There are other small mines. And central Dominican Republic actually is a mining area. So education starts with us and with them. Talking about the education, Gary, you're very experienced on this issue about the Commerce Department, talking about the ideas and the concepts and the policies, and you see people's understanding, appreciation, and reacting to the issues of mining and the metals. And one thing that we all agree here, I'm sure, is that the proficiency on mining and literacy on mining around the world is declining instead of steady state or improving, by the way, which is the issue we're going to tackle before we're over. But Gary, I'll leave it to you, introduce yourself and talk about your challenges.
Sure. First of all, it's an honor to be on such a distinguished panel, and Terence, thank you for your moderation this afternoon. So for the audience, my prior experience up until January 1st of this year is I served from 1983 to 2023. I served 40 years at the U.S. Department of Commerce in Washington, D.C., and worked over the course of my career with extraction-based industries. So I came in first with forestry, and then transitioned to chemicals, and then eventually through the previous administration that carried over to this administration was the area of critical minerals and metals. And the charge for the Commerce Department that really thrust it into the public arena was an executive order 13817, which compelled the Secretary of Commerce to coordinate for the first time in the history of the United States a federal critical mineral strategy. Now, one of the things that, as the lead coordinating author of that report, was that gave me an incredible exposure to a whole host of stakeholders in this place. Not just public stakeholders, which my friend Matt and I can certainly talk to you about. As a Defense Department representative, I was a Commerce Department representative, but there was also energy, and there was interior, and there was state. There was a total of 15 U.S. federal agencies that had equities in the critical mineral space. It took months just to figure that out. And so you understood the challenges among all of those federal agencies, but oh, by the way, we're now transitioning into the private sector and into the international sector in trying to deal with a whole host of issues. One of the great experiences of my career was working with incredible people like Matt and the interagency on recognizing that the theory of the case, as we called it, which is what's the basic approach to addressing this issue, came down to three areas. It came down to working with your domestic industry in terms of enhancing their capabilities in either the mining, the processing, or finishing sectors. There was also the second group, which was working with allies and partners. And then thirdly, well, one that I am so thrilled about this conference is the third area of the case is investment. You need all three of those working in tandem, because to deal with the kinds of issues like geopolitics, there has to be a recognition, not just locally, not just regionally, but globally, of the challenges and how to accomplish them together. Let's be very candid here, that because of the unsustainable practices that too many industries bought into, we have isolated ourselves to a almost drug dependency on one country. Now, sadly, we should have learned this lesson years ago. We fell asleep right after 2009, 10, and 11 when China was making it clear, not just to Japan, but to the rest of the world, we will punish you if you don't do it our way. Sadly, that 2009, 10, and 11 period quickly lapsed into our short-term memories, and we forgot. And then all of a sudden we find ourselves yet again thrust into the deep end of the pool, realizing we still have the same problem. We have not addressed those basic fundamentals, and what you and I would not do as public companies or even private companies where you are so dependent on one supplier, you would say that is poor business practices and that is unsustainable, and yet that's where we find ourselves. So I think the key to this is, number one, not taking our eye off the ball like we did in 2009, 10, 11, but it's also recognizing the geopolitical atmosphere is the one that we have the least control over, because these are certainly not folks that we're going to be dealing with that are going to be seen more as allies, but really as competitors and, in their view, conquerors.
These are great inputs, and I must say that we shouldn't take our eye off from the panel because it will be back next year. Joe,
I have a quick comment, because you referred initially to where the capital goes, and I would agree completely that jurisdiction will matter. But we should go to the very basics. Capital will be allocated to those industries that makes money. And as of today, copper companies are having essentially margins of 22 to 24%. Gold companies are having margins, like one of the better ones is Agnico with 23% or 33%. We're not seeing big margins. So regardless of the jurisdiction, if we're not making like 50% margins, 60% margins, 100% margins, we're not going to attract investors. It will happen that the only people that will be investing are going to be the countries in order to secure certain elements that are going to be important. The United States will be investing in copper, in nickel, in lead, in zinc, whatever will be important for them, as China has been doing very effectively. But investors like us, if there is no margins, why would I invest a company that has 20% with a lot of risk if I can invest in a bank or real estate? That's our job, to have a low cost and generate margins. As mining people, that's our job.
You're right, Jose, because one thing, this conference, in fact, even one before, a big one in Toronto, we even discussed was the cost curves, okay? People forget how much the cost curves has steepened. And the margins are very difficult to define for against the risk analysis for the returns. So in that context, you travel the world, Matthew. Do you see these concepts a bit more in the places you go to, or they just want to be focused on the asset themselves, the financial risks, for instance?
Yeah, again, the point that I can speak to is how the government review process, for lack of a better way of putting it, and that is, first and foremost, certainly there are published policy goals, some percent of zero-emission vehicles or some percentage of clean technology penetration by some date in the future. There's a tremendous amount of commercial tailwind to those targets, and so the government role in that sense is really not to sit in the driver's seat, because, for lack of a way of putting it, regulation is going to do that anyways. Or another way of putting it, I had a very good friend who was working for an automotive company, and they traveled to some very, very deep red states, and they decided to put them into an electric vehicle. And of course, the first half of that conversation is about how much they'll never drive an electric vehicle. And then as soon as they step on the pedal and they take off like a rocket ship, they start giggling and they never want to go back to an ICE again. And so I think to some extent the pure excitement factor of those markets will, in the long run, carry themselves. And so the government is in more of a facilitation type role in setting the conditions to be successful. On the other hand, there are a slew of other commodities where maybe it's a byproduct of a base metal, or alternatively, we'll say the core metal, like copper, moves in one direction, but the co-product, like cobalt, moves in the opposite. And that's one where I think you would expect to see a lot more government intervention to that space, precisely because they see some additional value in a stable, predictable supply of the material that's not explicitly tied to whatever kind of, extra market manipulation may be occurring.
Thanks on that, Matthew. I gotta finish it off, but by saying that, asking you if you all agree, any case study or debate should first identify the problems before we look at the solutions. Do you think we identified the problems of the industry today? John?
I think we scratched the surface. One of the things that we haven't talked about is we've just exited a 30-year period of very low inflation and low interest rates that we will never see again.
Yes.
Because of labor and capital and material availability. And therefore, the whole idea of high margins, subsidizing an industry, I think those things are a thing of the past. I think that the aspirations, the nationalization aspirations of certain countries in Latin America and other parts of the world that could be afforded when they had reasonable debt levels are a thing of the past. The debt levels of countries are too high today. So that's another factor that we haven't even talked about that's going to shape the industry.
Correct. those margins are going to disappear very fast with the demands by the stakeholders. Dividends on this side, governments on the other side, and the local stakeholders. And the other issue is that the tax collection in many countries do not go where the mines are. They normally stay in the capital, typically. Gary, last words?
Yeah. I think the thing that, again, a panel like this that goes by so quickly doesn't give us a chance to explore kind of like the unknown discovered country of the future, and that is, how does geopolitics drive future trade pacts and future trade agreements? We've seen a lot of international collaboration and cooperation, but where does trade policy and the engagement of government-to-government engagements that drive so much of what the private sector does, how does that help to take the hard edges off of many of these critical minerals? We see it in some examples in like an IPEF, the Indo-Pacific Economic Framework, that the Biden administration has sought to engage the world. The challenge with that is it's not a traditional trade agreement that would have the kind of enforcement mechanisms. I believe that one area that governments will begin to need to explore is how to formalize these negotiations so that labor, environment, ESG becomes a part of the conversation, not a tag along just to throw into a trade agreement. That's where I think geopolitics of the future are going to really compel the trading pacts and trade agreements of the future.
Thank you, Gary. Matthew, last word?
Sure, just one very brief comment, and that is the one thing that I suppose is certainly reassuring for this sector is that if we were to compare Obama to Trump, Trump to Biden, there's been a remarkable consistency in at the very minimum critical minerals policy, which again is not something that you really would expect, considering that on considerable other political issues they are very, very far apart. And so that is something that, again, even as I look at other jurisdictions, the European Union, Japan, South Korea, that consistency of policy about the need for more resilient supply chains is consistent across the board. The open question, which is the principal open question with any kind of democratic form of government, is does the resourcing continue to follow the policy talk, and is that maintained year over year, knowing that we have elections every 2 to 4?
Thank you for that. Jose, last word?
Well, thank you so much, everyone, for attending. Right now, we are really running out of time, so I really appreciate your time, and I think that geopolitics will keep being driven by where the people makes money.
On my part, I'm very privileged to host you guys. Fantastic, great views, great insights, and we're going to be back next year with the same panel, with your permission. Thank you very much.
Yeah.
Thank you.
Thank you.